Let's talk about Europe anyway, because the ECB's long-awaited decision on what it was going to do to get this ailing economy out of the doldrums and to reflate it was announced today by Mario Draghi, who is the top man at the European Central Bank. In the studio in Johannesburg is Dr. Azar Jammine, who's the chief economist at Econometrix. What did they do, and will it work, Azar?
Essentially, they're following the lead from the Federal Reserve Board in recent years to try and resuscitate the Eurozone economy, and in particular to prevent the Eurozone economy from going into a deflationary spiral, because they know that if prices carry on falling, the tendency is for consumers to hold off consuming goods until a later date when they can buy those goods more cheaply, and that slows economic activity still further. So what the principle of this is that the ECB basically prints money, creates money, and buys back the bonds in various European governments that various financial institutions and others will have bought. And in this way, it transfers cash into the hands of those institutions. And the hope is that those institutions with greater reserves, cash reserves, will then lend on that money to individuals and to businesses, and in this way get the economy going. But there are a couple of added elements to this. By creating many more euros, I think deliberate intention is to get the euro to depreciate further, and by depreciating further, this will work against deflation in Europe. It'll work more in favor of inflation, and the objective of the European Central Bank is to get inflation in Europe back up to 2% from its current level of close to zero. And the second thing is to try and to hope that this helps asset prices in Europe, in particular bond yields, by keeping them very low. That means that governments in Europe who have huge levels of debt will find it less costly to finance that debt than before. So it's a multi-pronged effort to try and get the European economy out of the lull that it's been in for a number of years.
Dr. Jammine, for a country like South Africa, where the Eurozone is one of our biggest trading partners, what does it mean for us?
In some respects, it's good news, because it means that the rand has strengthened against the euro. And so that means less inflation of imported goods coming into South Africa, which in turn means less chance of interest rates going up anytime soon, or maybe even some will say going down, but I don't subscribe to that. And the second, but on the other side, for businesses that are involved in exporting to Europe, this is bad news, because they will get less money now. They will be less competitive than they were before.
Dr. Jammine, that sounds like a good deal for the Germans to me. I mean, obviously the euro is a continent-wide currency, but if I was BMW or Mercedes or VW or Siemens or something of that ilk, I would say to myself, the euro's gone from 140 to 114. Thank you very much.
Very, very much so. There's no question that this is bound to give a boost to the profits of German and other European multinationals who have operations in Europe. But of course, if they repatriate their profits from countries like South Africa now, they ironically will get less euros than before.
Dr. Jammine, looking at the recovery in the US, I mean, what was it, 5% in the last quarter? That was a low unemployment rate. How much of that could be attributed to actually the kind of expansionary monetary policies that the US has put forward versus the much freer, less structural restrictions that the US economy actually has? I mean, my question is, did QE work in the US, or was it actually the underlying strength of the US economy?
I think that's an absolutely critical question. You could argue that QE would work in America far more than it would in Europe. Partly also because the holding of assets in the United States is far more diverse than it is in Europe. So more people who held financial assets in the United States benefited from the boom in financial asset prices that resulted from this. So yes, quite rightly, it could be more difficult to get this thing going in Europe. The other thing to bear in mind is that America is a very entrepreneurial society, and there are fewer labor impediments and other impediments to doing business. So, and there's greater freedom in the financial regulation. All that may result in this having a lesser of an effect in Europe than it did in the United States.
Azar, you tend to find that the currency markets go in one direction for a long, long time. I mean, we've just come out, I think, of a 28 or 29-year bear market for the US dollar. So do you think that this euro weakness is going to carry on and carry on and carry on bit by bit? And if so, what do we do with it?
Look, I think the Europeans will not be too upset by it falling to about 114 or whatever. You only need to take yourself back to a decade ago when the dollar was more valuable than the euro. So, you know, it does have scope to go down a little further. But at the same time, you know, as long as it doesn't create too much inflation, I don't think it's terribly serious. And that's the whole objective, is to create a little bit of inflation so that people start buying in the goods and services in the hope of seeing the prices rising later on, and that can get the European economy going. But yes, the outlook for the euro itself doesn't look terribly good at the moment, but maybe that's the way that's exactly what the ECB wanted to achieve.
What about the US? Will the Fed have to take this new QE measure into their considerations when it comes to raising interest rates in the second half?
Very interesting. After the last FOMC, where the last FOMC minutes showed how the Fed did state on two separate occasions of how important developments in Europe were for the Fed. And why this whole move is likely to be positive for the markets is precisely because people feel that the Fed will now delay increasing interest rates even longer because of this, in order to you know, make sure, because they are worried about the European economy being very slow. And also now, if the Americans were to start tightening, that would cause the dollar to rise even more and make America less competitive in Europe, and American goods less competitive in Europe than they have been in the past.
Dr. Jammine, thank you so much for your analysis this evening. That was Dr. Azar Jammine, Chief Economist at Econometrix.